this is Eric Thompson. I am CEO of Peerless Wealth. We are an SEC registered investment advisor located in Columbus, Ohio. As always, thank you for tuning in. The title of this one, AI, can artificial intelligence pick a better stock portfolio? I have been using AI more and more in my day-to-day life, specifically ChatGPT, and I joke that it's almost like having another assistant, even though my main assistant could never be replaced. But to fact check things and to have others, to have a whole at your fingertips, it's absolutely amazing. And I continue to be impressed with how much it can do. And for me, it's an efficiency. It saves me a ton of time. I can have it do a tax return for a client, tell me how much taxes is owed on their IRA distribution. If I want to know, what the preferred dividend rate is on a certain stock, I can do so much with it so quick, so much faster than I could do if I Google searched. So anyway, I'm a believer in it. So the next question, of course, is, could it help investment returns? Could it pick a better stock portfolio than the fund managers at BlackRock and Vanguard and T. Rowe Price and the like? And so let's go through my thoughts on that. And I always tell my clients, I'm constantly on the lookout for additional return for my clients' investment portfolios. If there's something out there that can boost returns, especially without boosting risk, it's in my best interest to do it for my client. I get paid based on the value of the account. The account goes up, I do better. So I'm always looking to add value by selecting good investments. That's one of the main parts of my job. And I'm also guilty of scrolling, whether it's through Facebook or Instagram, and every now and then it'll say something like, AI generated stock picks average, 75% versus S&P 43%. And so I'm thinking to myself, okay, let's dig into this stuff, and maybe there is something to it. And as I dig into it, I find that it's really not there yet. And I'll tell you what I mean by that. There is a company called Market Sense AI. PhD students, they've written white papers on AI and investing, and they have a whole website on how to use AI to invest. And they market a 135% return over the last 18 months. It actually wasn't the last 18 months. It was a period from like 2023 to 2024. 135% versus 48% for the S&P 500. 48%, pretty good time too, but 135%. So I was compelled and I dug into it. And I kind of suspected this, but what I found is this was not an actual portfolio that they were running and its correspondent rate of return. This was what's called a back test. This is very common in the investment management industry, is to create a back test, a set of circumstances, and it's a lot easier with AI because of all of the information that it knows and the data that it knows going back years and years and years. So you could say, hey, AI, what if we bought stocks with XYZ characteristics, certain price earnings ratio, a certain market cap, a certain growth rate, all these screens. What if we did that over the last 5 years, over the last 3 years? How would it have done? And within seconds, it'll spit out a result. Oh, you would have averaged, 10.1% a year. That's not really high enough. Let me keep going. And they just keep data mining until they figure out a screen, essentially a stock screen, a set of circumstances that looked the best. It's really not that hard to do that. Then they market that as a portfolio return. It's not an actual portfolio. It's a back test, and it's data mining. So is there anyone running an actual portfolio? There's some. I found them. Now how can you find them? Well, I looked exclusively through publicly available mutual funds and exchange traded funds. Now, there may be some private vehicles, hedge funds, or private equity that don't publish their returns, But most of you know what an ETF mutual fund is. I use these things as building blocks for my portfolios. And the great thing about them for investors is they have an audited track record. And I know this because I'm a co-portfolio manager and sub-advise an ETF strategy, and the SEC and the attorneys, everyone, they audit the heck out of it to make sure your track record is correct. So I found four ETFs that describe themselves as using AI to pick the stocks and manage the portfolio. So which ones were they and how have they done? The first one is from a company called Amplify. They're pretty big. I think they have about 10 billion in total through all their strategies, and they actually have some pretty good ones. And this first one's called the Amplify AI-powered equity ETF, symbol AIEQ. So this is from their website. How does it use AI to pick stocks? It uses AI to look over the financial statements, to look over news articles and press releases, social media sentiment, industry and analyst reports, macroeconomic indicators, technical and market data, all of these things, and it spits out a list of stocks. Well, how's it done? This one's actually been around a decently long time. It's been around at least 5 years, and I'm going to go ahead and show you this. This is from a report from Morningstar that post returns from mutual funds and ETFs. And what you see here, number one, it has a bronze rating and it has a 1-star rating. That's the lowest rating. It's 1 to 5 stars, 5 stars being the best. Why does it have a 1-star rating? Well, if you look over there at the returns, and I'm going to show you the 5-year one, I've highlighted it. The total return, 8.73%. That's an average annual return. That actually doesn't sound too bad, 8.73%. However, we've been in a very good market for equities, for stocks. So the average ETF or mutual fund that invests in growth style companies, the category average 13.68, and the actual index averaged 14.35. So it did just a little under 9. The index did a little over 14. That's actually not very good. And that's why this fund ranked in the 98th percentile of its peers. In other words, 98% of other large cap growth mutual funds had a better 5-year track record than this one. So I would actually call that a failure so far. We'll see. Maybe they can improve. So that's the first one. Second one, this one is this one's called the Kraft AI Enhanced Large Cap Momentum ETF. And from what I could tell, Kraft is a bit smaller, only about 70 million under management. It's very small in this space. And let's look at their Morningstar report. So we see it's 2 stars, negative. And let's go over there and look at the 5-year track record. Total return average 14.1. That's a lot better than the last one. But it's still a little bit below its category average. So other mutual fund managers, most of which are not using AI, they're doing it the old-fashioned way. It's under that, and it's under its index. So that puts it in the 58th percentile. So 58% of other funds in this category actually had a better rate of return over 5 years. What about the last two? Well, the last two are now closed. They tried to do this. They were open for a year or two, and their returns sucked so bad that they just decided to close their doors. And I really don't have a lot of data on them, but I know if they've closed, the reason why they closed is just because their returns aren't good. So the verdict so far, we're not there yet. My opinion, because here's the thing, Wall Street, and when I say Wall Street, companies like Goldman Sachs, BlackRock, JP Morgan, Fidelity, T. Rowe Price, Vanguard, if they could figure this out using all their money and brain power and research, they would develop a product, they would charge expenses like all mutual funds do, and they would make money from it. So far, it hasn't happened yet. So my opinion is AI does make portfolio management a lot easier and more efficient for fund managers because, for example, right now we have a little bit of a trade war going on with America and China, and there's rumors that the iPhone might double or triple in cost because of these tariffs. Let's say you're thinking about investing in Apple stock in your portfolio. You could ask ChatGPT, what percentage of Apple sales are, or what percentage of the phone is made in China? And you would get an instantaneous answer. So it makes it easier to do research. Normally, you'd have to hire an investment analyst for that. Now these firms probably can do more with less. So this should make investing more efficient, maybe bring costs down a little bit. But as far as actually stock picking, we're not quite there yet. And one more thing, a lot of these things you see on social media, again, it's back-tested results. Or here's the other strategy they do. Maybe it's not back-tested, maybe it's actual. But what they'll do is let's say 2 years ago, they incept 10 portfolios of stocks that all only have maybe $10,000 each in them. And each one of them are run on a different AI screen or whatever. So they're slightly different. Then at the end of the period, whether it's 2 years, 3 years, they look at the one that has the best rate of return. They don't show you the other 9. They show you the one that had the best, and they say, this is the portfolio we've been actually running. So you kind of have to do the research on these things like I do. That's why my clients have me. I hope you enjoyed this. As always, thank you for tuning in, and we'll see you next time.